Hi everyone, how are you? Hope you are well. So today we're going to talk about student loans and can you buy a house with a student loan? So the short answer to that is yes, you can. So different people are in different circumstances, which I'm sure you are aware. I have my handy dandy calculator here until I learn how to put numbers on the screen. If someone can show me how to put numbers on the screen, or am I going to have to figure it out myself? So some people have student loans. Some people have 10,000 in student loans. Some people have 50,000 in student loans. Some people have 100,000 in student loans. Some people have 200,000 in student loans. Some people have 300,000 in student loans. Can you buy a home with student loans? High student loan debt. Short answer is yes. For first-time home buyers, head on over to NACA. You heard of NACA before. They don't care what your student loan debt is. They don't care what your credit score is. Their goal is to help you buy your home for first-time home buyers. Of course, they are going to make sure that you can afford the house, but they're going to work with you over a period of time. So they're working with you, and their goal is to help you to get the home. So these things will not hinder you from getting a home, not just any home, but a home that you love. So head on over to NACA if you're a first-time home buyer. Also, if you have not had a home in 3 years, you can also go to NACA. So first-time home buyers, or if you have not had a home in 3 years, you can head over to NACA. Like I said before, they help you even if you have a bad credit score. They help you even if you have high student loan debt. Their goal is to actually help you, believe it or not. So we're going to talk about, say you're not a first-time home buyer. Say you already have a home and you're starting to build your rental portfolio and you have high student loan debt. So you already have a home. Can you buy another home with high student loan debt? Well, they are looking at your debt to income ratio. The answer to that is yes, but the more you buy, the higher your debt is going to become. And so eventually that may become a hindrance. So I'm going to go over the debt to income ratio, especially for if you're interested in building a rental portfolio and you have student loan debt. Debt to income ratio. Your lender is looking at your debt to income ratio. And if your debt to income ratio is too high, guess what they're going to say? They're going to say, no, your debt to income ratio is too high. So the lenders, especially at the banks, you'll come to find that's all they care about. Well, they care about your credit, but mainly what they care about is your debt to income ratio. And that's all they care about when you go to the bank. So we're going to calculate the debt to income ratio and going to pull out my little calculator here. If you would like to join me, I give you a few minutes to get your calculator. And we're going to do debt to income ratio. Show you what the banks are looking at if they decide to qualify you for the loan or if they decide to deny you the loan. All right. So everybody is in a different situation. Some people have parents who pay for their education, and other people get their education the best way that they can. All right. So you guys ready? Debt to income ratio. This is what the banks, this is all they care about. Debt to income ratio. So what we do is we take our gross monthly debt. Gross monthly debt. How much debt in 1 month? So I'll give you an example. Debt, 5,000 in 1 month. And divide that by gross monthly income. Gross is before taxes. How much did you make in 1 month before taxes? So we're just going to do an example. We got your debt divided by the income. Let's say you bring in 9,200 in 1 month before taxes. So we take the 5,000 divided by 9,200, and we get a debt to income ratio of 54%. 54%. So is that a high debt to income ratio or a low debt to income ratio? Well, according to the bank, they want your debt to income ratio to be low. Like, you know how, okay, you have the number 0 and you have the number 50, right? So they want that debt to income ratio low, over here near that 0, less than 35%. That's what they want. All right, so you got 0 over here, got 50 over here, and I just calculated a debt to income ratio of 54%. So that is considered high. So is the bank going to tell you yes or no, since this is all they care about? So according to the bank, 35% or less is good. When you get into 50% or more, then that is considered high debt to income ratio. They want a low debt to income ratio. So the maximum debt to income ratio, or DTI, for FHA loan is 57%. So that's all they care about. Where is this number going to fall when I take the monthly debt divided by the monthly income? And if it is higher than 57%, then the loan is denied. All right, this is for FHA. Keep in mind that different lenders have their own requirements. Less than 35% is good. 36 to 49 is moderate. 50% or more is considered higher. And so that is the debt to income ratio. That is what the banks are looking for in deciding on whether they are going to give you a loan or deny you the loan. Then the more properties that you buy, the more that you add on into your portfolio, the higher that debt to income ratio gets. And hence, in order to build the portfolio, you're going to start moving out of that traditional lending process to non-traditional lending processes, because the bank is not where you need to go if your desire is to build wealth and build a portfolio. Especially, that's all they're looking at, the debt to income ratio. So going from the traditional route of going to that bank to finding out what those non-traditional routes are, if your desire is to build your rental portfolio and to essentially build wealth. So I do go into detail about the non-traditional ways. There are ways that people are building wealth out here, regardless of their current circumstances. All right, so I just wanted to let you know what the bank is looking at, how to calculate debt to income ratio. You can consider working on paying down your debt, especially your credit cards, knowing that that is what they're looking at, but then knowing that there is more than just the traditional way. There's the non-traditional way to get lending to accomplish what it is that you are trying to accomplish. So if you like the channel, please hit the like button, hit the subscribe button if you're not a subscriber, and notification bell next to it so that you won't miss an episode. Also, leave a comment at the bottom. Let me know your thoughts. Thank you for watching. Have a good rest of your nights.